Back in action here, stocks, the numbers, and I wanted to do just a quick update here on a couple of tech companies. We had some brand names reporting earnings today after the bell, one popping, one dropping, kind of going the opposite of probably what a lot of people were betting on. So let's get into some of the numbers. First company, Intel Corporation, symbol INTC, listed here on the NASDAQ. Stock closed at about 21.5, down 78 cents, 3.5% on the dot. Right now, after hours, up a nice full 2 points, roughly 9.25% on a nice revenue beat and a little bit of more positive guidance now moving forward. So Intel was a company that I know a lot of people were counting out. And if we back it up, we go back to last earnings, the stock took a really big hit. Very disappointing. The company mentioned a lot of negatives that Wall Street did not want to hear. We chunked the stock down to 20 and we took it even lower here down to these lows of about 18.5. Slowly started to bounce up. You can see how it basically flattened out for the most part. Slight down consolidated channel going into these earnings. Massive EPS miss, reporting a loss of 46 cents a share. Estimates were only about 2.4 cents a share. So they missed that by a mile. The revenue, though, comes in healthy. 13.284 billion on revenue, estimates 13.02 billion, beating by over $250 million, roughly 2%. So last time I looked at Intel, I look at the numbers, of course, and we look at the chart. But in the numbers, I said in my opinion that there is value there. And there are also some rumors circulating about Qualcomm potentially taking them over and Intel just potentially looking to sell off and kind of get rid of a handful of its assets, bring in a couple of $1 billion in cash and, just try to restructure the whole thing. And it seems like the company, for the most part, is holding their head above water. But in my opinion, I feel like we stopped it at 18.5 and had to start climbing it just because of the quote unquote fair value, the assets, the equity that they're holding, and just the book value as well. So if we come here, we can see that 53 billion in debt. We have over 11 billion in cash right now. We have assets outweighing liabilities. If we come over here again, we can see equity has been technically slowly ticking up now for 1, 2, 3, 4, 5, 6 quarters in a row. And again, the book value, this is what I cited as well. Even going back here, the book value was between like 23, 24.5. And the stock was down there at 18, 19, 20. So that's why I said, in my opinion, right now in the short term, it does kind of look like crap potentially with these earnings really just being inconsistent, right, from quarter to quarter. But in general, on paper, the stock could only go so low before it had to rebound and get back to kind of fair value, which here does kind of look like around $24 in my opinion. I know for last quarter we can see book value at 27, which technically is good for the company, of course. Stock right now 23.5, so almost right back to that level. Market cap right now, they closed at 92 billion. Obviously we're up about 9%, so right now we're at about 100 billion. And obviously we saw revenue come down, but again, at this 100 billion valuation, even though they've been dealing with inconsistent earnings, you do see that the company still technically for last year was profitable. I know they just reported a big loss. We'll get to the earnings. But for last year, they were slightly profitable. And you can see revenue, even though it dropped down over the last couple of years, losing some market share, still bringing in over 54 billion for 2023, which right now, even after this 9% pop, puts us at about 2 times revenue to market cap, right? And of course, again, the book value actually on paper in the numbers, you could still make the argument that the stock is undervalued. But of course, it's the inconsistencies in the earnings that is just throwing people for a loop here. But let's get into what's going on. So, all right, revenue down from last year, but better than expected. Chipmaker also offered guidance for sales growth in the current quarter that was above expectations. Yes, we're going to get to Apple as well. Intel. Revenue clocked in 13.3, beat the estimates of 13.02. Quote, our Q3 results underscore the solid progress we are making against the plan we outlined last quarter to reduce costs, simplify our portfolio, and improve organizational efficiency. We delivered revenue above the midpoint of our guidance and are acting with urgency to position the business for sustainable value creation moving forward. Also, remember, Intel was, as I said, one of the first companies to step forward under the last Trump administration, saying that they were investing, I think it was like $2 billion and change, don't quote me, but building a facility, maybe in Arizona, again, don't quote me. But again, they were showing that they were trying to build it here in the States and keep it domestically. So that's why I mentioned again that while these couple of quarters may be a rocky road for Intel, if we do happen to get another Trump presidency, I think, in my opinion, Intel will benefit over, again, it may take, 12, 18 months after elections. Well, actually, technically after January when he gets sworn in, right? If he wins, of course. But you understand what I'm saying. I think Intel will get back in the spotlight and gain much more momentum, much more positivity if we do have a Trump victory. But right now, it does seem a little rocky. Quote, the momentum we are building across our product portfolio to maximize the value of our x86 franchise, combined with the strong interest Intel 18A is attracting from foundry customers, reflects the impact of our actions and the opportunities ahead. Company recorded an impact of negative 63 cents to non-GAAP EPS, attributable to Intel from $3.1 billion of impairment charges. Restructuring charges meaningfully impacted Q3 profitability as we took important steps toward our cost reduction goal. The actions we took this quarter position us for improved profitability and enhanced liquidity as we continue to execute our strategy. We are encouraged by improved underlying trends reflected in our Q4 guidance. Intel expects fourth quarter earnings of 12 cents per share, gross margins of 39.5%. So, technically, as you see, that is a higher EPS, and also I believe the revenue was guided a little bit higher than what Wall Street expected. Yeah, so revenue this time last year over 14 billion. The company brings in, again, a little over 13.25 billion, but technically beat estimates. The company expects EPS at 12 cents and revenue between 13.3 billion and 14.3 billion. Excuse me. Analysts were expecting 7 cents a share and revenue of 13.72 billion. So technically now the range, as you see, what analysts were originally expecting for next quarter, Q4, is more towards the lower end of the range of what Intel is laying out for us. So if we're expected to be, probably above this estimate in the range and potentially even above 14 billion next quarter, while at the same time, the restructuring is now already bearing fruit, and instead of posting 7 cents moving forward, we're going to post 12 cents. So this is why I was talking about the U-turn recovery, and now it seems like, based off this guidance, it could be happening a little bit quicker than everyone anticipated, which is probably why the stock is immediately seeing a pump of 9-10%, jumping back up 23-24. If we continue in this pattern as well, just looking at the technicals here, where are we? High 21.98, right? So if we just extend that out, and let's say now we're in this upward channel, 1852, right? No, technically it's like this, right? So now, if we're going to potentially be in this upward channel, potentially rising wedge going into next quarter's earnings, then you can see that we do potentially have a very good chance to gap fill here from where we gapped down back in August, which, as you see, top left of the screen, the O, the H, the L, the C, that's the open, the high, the low, the close. Low, 28.89. So we could potentially, now that we came right down to the bottom of the range, which we kind of just laid out, but now you can see that that was the bottom and we have the pop. So this is why now, after being in this downward little channel, we may pop and run up here to 26, high 26s, potentially 27, and then sell off and just keep bouncing in this range, right? But you can see the potential to get back up to high 28s, potentially 29 plus, and fill that gap. And all of this can happen going into the new year. And then, on top of it, because they're forecasting a better quarter, and this is going to be the tail end of 24 now going into 25, This is estimated to take place roughly the third week of January, which is going to be right after the ball drop. So now if they restructured and got the costs in check and did everything they had to do on their end on the inside, and now we're on the up and up, then as the ball drops, we could potentially be running into what's known as the January effect. Again, that is when hedge funds, fund managers get rid of underwhelming positions and they look to reposition in new stocks that are obviously going to potentially have a much better year than their counterpart that they just got rid of. So that's why we could potentially see some January effect and some volume come into Intel as the bull drops, because again, even if the stock runs back up here, 27, let's say, you know, we just looked at the numbers here, and as of last quarter, again, the book value was almost 27. The equity of the company technically has been steadily climbing. While the revenue, again, has been kind of hit and miss along with the EPS side, it seems like now we're getting some positive guidance moving forward, and over the next 1, 2, 3 quarters, we could potentially surprise and come out with some beats, which of course, in my opinion, would immediately bring the stock back up to the mid-30s, if not 40. So in my opinion right now, I do still like Intel, and as much as we bash the company overall, it does seem like they have a decent amount of assets on the balance sheet, and also are potentially being eyed, as the rumors were saying, from other companies like Qualcomm. And I only mention that because that doesn't mean that something is necessarily going to happen in regards to a sale of assets. But more importantly, it shows that there is some value here if they would be able to sell assets to another tech company like a Qualcomm and obviously generate a handful of billions of dollars, and you know, and then the sky's the limit. Who knows what they'll do with that money? So that's why, in my opinion, I actually do feel like they're in a pretty decent spot, even though a lot of people may disagree with me, and of course you're entitled to your own opinion. But yeah, they beat earnings, they beefed up guidance. CEO says chipmaker is not going to achieve AI forecast. What's this? Won't hit the company's prior forecast for AI-related chip revenue. Okay. So again, technically that's a negative. But if we turn around 3, 4 quarters from now, and again, the company's rocking and rolling, we're beating earnings and everything's fine, then basically what this is going to be viewed as is just a small obstacle, a small setback for a couple of months, and now we're back on the up and up. Which is why when it dropped initially to 20, I said, in my opinion, this may be an overreaction. In my opinion, I would consider, you know, beginning to buy and build a position down in 19, 18, and once it continued dropping. So again, of course, we know it's practically impossible to time these things perfectly, but this is why, again, if we look at the numbers, and of course, you also have to have faith in the company, right? Faith in the management team. And it seems like Intel is trying to do everything in their power to turn this story around. And as I said, if for some reason they need to raise cash, they actually have some interest and some potential buyers of assets. So it might not be too much of an issue, even if they run into another issue, let's say. But right now, after hours, 23.46. Let's see where the stock actually went. Stock hit a high of about, 24.77, it looks like. And we can see that right now at 23.45, top Bollinger Band on the daily, 23.73. So technically, we did spike above that, and then we pulled back down below it. But with the RSI down here in the 40s, and you can see it looked like the MACD recently tried to cross back up to the upside, but then had a drop here today of about 3.5% going into earnings. So now the MACD is going to curl and potentially cross back to the upside, which is going to help the momentum even more, which is going to push us up to further resistance levels, which is why, in my opinion, I think saying 26, 27, in my eyes, really should be a layup from this level. And of course, I am also looking for the potential gap fill right there at whatever it was, $28.90, $29. But you can see they brought the stock right back down to the 50-day moving average, and now we have some good numbers, some good guidance coming out. But the stock has been trying to hold that 50-day moving average since hitting those lows and rebounding back up during the month of September. So obviously, anything can happen. We have to keep an eye on it day by day, but in my opinion, I think it fills that gap. RSI was down here at about 37.5 on the weekly. So, Now the mid-Bollinger Band 2468 stock was hanging out at about 2368, right near the top Bollinger Band of the daily. So here on the weekly, in my opinion, getting back to the mid-high 24s, 25 again, really shouldn't be an issue. And even if we kind of retrace kind of half that drop, you can see that would be around 26, maybe 27. So only time will tell. But again, the MACD got completely decimated here since the ball dropped in 24. And now we recently had the cross back to the upside, bouncing off that absolute low of the low. Stock began consolidating, and now we could potentially see it start to step back on the up and up and try to climb back to the 30s. Because, again, we have key levels now coming down because the stock's been struggling for a couple of years. So now we have our 200-day and our 50-day curling downward to meet up over here. So the 50-day is probably going to end up at like 30 if the stock continues to step up, and then it's going to try to reclaim that 30 in my opinion and get back above, which would signal even more bullish momentum. This 200-day moving average probably slowly going to come down to about 36.5. And again, depending on what news we hear, if we do see the January effect volume start rolling in for INTC, then in my opinion, I think it could get back up to the mid-high 30s. But Intel making progress on 10 billion costs. There you go. So Intel, decent quarter for them right there. And of course, a little bit of beefed up forecast guidance moving forward for Q4 next quarter. So let's get into Apple now. Apple Incorporated, excuse me, AAPL on the NASDAQ. Stock closed 225.91, down about 4 points, 1.8% going into these earnings. After hours, down about another 4.5 points, roughly 2%, down to 221.39 currently. And we can see that initially we had a spike up, and then we just dropped down and gave it away. I know people were citing, I think that revenue out of the China segment may be a little light. So let's find out what happened here. The company ended up missing on the profitability side. They ended up reporting EPS of 97 cents a share. Estimates were $1.60. So they missed that by about 63 cents. Usually a surprise here for Apple because they are, for the most part, pretty consistent. But they missed that mark by over 39%. The revenue, though, did come in healthy and almost touched $95 billion. They brought in $94.93 billion on estimates of $94.512 billion. So they beat that by over $400 million. So the revenue seems healthy. The profitability took a hit. So, of course, because it's not the perfect result, and Apple definitely got pumped up. I mean, we're looking at a market cap. Look at that, almost $3.5 trillion. So we saw the profitability starting to step back over the last couple of quarters, and then to miss by almost 40% with a big surprise like that. Probably one of the main drivers behind the company going down. And you can see next quarter, right now, the current forecast is $1.60, exactly the same EPS that was estimated for this quarter. So if they did incur, some one-time losses or some, a little bit higher capital expenditures or whatever the story might be, then we could potentially have a situation where Apple may kind of sell off or remain flat for the next 2 months-ish, and then it can start bottoming out and climbing going into next earnings. And if this was a one-time issue, then you can probably, bank on a potential beat roughly 3 months from now, right? The end of January, early February. But let's see what the numbers actually reported here. Apple sales hit quarterly record as iPhone business rebounds. Apple reported revenue reached an all-time high for September quarter, propelled by a modest rebound in iPhone sales that came ahead of its release of new artificial intelligence tools. For Apple's fiscal fourth quarter, total sales were $94.9 billion, beating the $94.5 billion estimate. Net income fell around 35% to $14.7 billion due to a judicial ruling in Europe that will force Apple to pay more than $14 billion in taxes to Ireland. So there you go. Honestly, again, I didn't pull that out of my hat. I again basically said that it seemed like they may have had a one-time issue, and honestly, I did not read this earnings report, but we can see have to pay out more than $14 billion in taxes to Ireland. So yeah, of course, that hurts your profit margins. And right now in the moment, again, even though this sucks, this does seem like it may be just a one-off thing. And moving forward now, they probably should get back on track, in my opinion. The one issue I do have with Apple, though, because I know it's an election year and I know it's very annoying because they put this election news and you have Trump and Harris. I know they're everywhere, and I'm sure we're all exhausted from hearing about all of this. But I will say again, Apple, I know Donald Trump said he wants to make these phones here domestically in the States. And we shouldn't have to have them making them overseas and shipping them in. Because, of course, if he's going to potentially beef up tariffs as well, that's probably going to impact Apple's profit margins also. So, again, not necessarily saying that we're going to run into a huge negative issue, but I have a feeling that Apple, if Trump does win the election, I have a feeling that Apple may start to move back a little bit more domestically, which may in the short term slightly impact their profit margins. However, analysts on Wall Street are probably going to compensate for that move and any potential higher labor expenses here domestically, and they're going to adjust the EPS numbers accordingly. But of course, we'll cross that bridge when we get to it. But Apple apparently remains very popular. You know, it's viewed as a status symbol, apparently, amongst young people. You can't just have a smartphone anymore. You need to have an iPhone. So, again, whatever. I'm not going down that road. I don't even have a phone. You guys know that. But apparently, Apple remains in the spotlight. People love it. And the business is just chugging along. The launch of Apple Intelligence, a heavily advertised set of AI tools, has prompted a rally from investors who hope the features will lead users to upgrade their smartphones. Apple's iPhone business, which accounts for around half of overall sales, had sales of $46.2 billion. The results represent a turnaround from the first half of the year when smartphone sales were sluggish 4 consecutive quarters. So, of course, if that's your bread and butter coming in, your main revenue stream, if a massive percentage of it is coming from the smartphone, the iPhone business, and then if sales start to slip, yes, of course, Wall Street's going to take an axe to your stock. Now we're getting a little bit of a different story. We're getting that surge, that rebound in iPhone sales. So now everything's fine. But of course, the big EPS miss, that tax payout to Ireland, right now currently hurting the company in the short term. But chances are, as analysts are digesting this information, again, I will mention the potential January effect and the volume that can come into Apple, especially if they're still forecasting, strong demand for their products and strong sales numbers moving forward. And also, again, if we hear they're trying to move some business back domestically here in the States, again, it's going to be a double-edged sword because it hurts profit margins, but at the same time, it could help the business and help the company. So, depending on the market environment at the time as well, will determine which direction Apple goes. But in my opinion, probably going to remain steady. And of course, our friend Warren Buffett always spoke highly of Apple. In China, where competition intensified after domestic smartphone champion Huawei released a high-speed phone, Apple's revenue reached $15 billion for the region, a slight decline from the same period last year and nearly 6% below analyst expectations. So that's why, kind of beating them up a little bit. Almost good comparison is almost to like these telecom companies, right? It's like no one even cares anymore about, like the landline business or like the internet or anything like that. How many new lines did they lay, right, for high-speed internet? Like all of that gets pushed to the side. And now when these analysts look at earnings for companies like AT&T, Verizon, they're like strictly looking at mobile users and sign-up contracts, right? And I can appreciate the fact if that's where their highest profit margins come from. But at the same time, a lot of these companies do more than one thing. And that's why sometimes in my eyes, when the bigger, broader picture seems okay, and you just had, one slight decline or an issue in one segment, to completely rip the company apart may seem like a little bit of an overreaction, which is why, again, I like to look at the numbers. And if we feel it's an overreaction and the stock is now under or fair valued, that's when it should gain attention in my eyes. But the growth in iPhone sales was a positive surprise, indicates people with iPhones that were 3 to 4 years old are ready to upgrade. There's an underappreciated demand. Quote, it's super encouraging to see this growth in advance of the AI features fully launching. Apple's peers reported strong results this week. Amazon rose by more than 4% after hours. Cloud services, e-commerce sales, Microsoft and Google posted double-digit revenue growth due in large part to rising demand for their AI-powered cloud services. On Wednesday, Meta logged record quarterly sales thanks to strength in digital advertising. But these big tech players, including Microsoft and Meta, face wary investors after reporting rising spending on the AI boom. Well, it takes money to make money. That's what the saying always says. So, again, that's why when these companies say, oh, we're investing, $8 billion in this, or, we're earmarking $14 billion for AI to get involved, immediately you get a decline because technically the company just spent a lot of money and in the current moment has nothing to show for it. And then down the road, 6-12 months later, as the revenue starts trickling in and we realize, oh, they made a wise decision and they made a good investment, that's when obviously the stock begins to grow. So that's why even something like that right now, I guess could be viewed as a slight negative, but chances are it should pay off for them. Apple always had like a good marketing team, and I remember people used to always talk about those weird Apple commercials. Remember those weird iPod commercials and whatnot? So Apple has, always kept themselves in the spotlight and always remained with, increasing demand for the most part over time, as they said. And that's a perfect way to put it. Apple has taken a more cautious approach compared to Microsoft and Meta, increasing operating expenses at a far slower rate this year. Well, perhaps if they were dealing with the judicial issue again and they were sitting there saying, oh crap, we might have to write a check for like 15-20 million, then yeah, I would try to slow down my spending as well. People make me laugh. In September, Apple released its iPhone 16, they're up to lineup, which it said would enable a personalized and more private AI system than from others. The new AI features are available on the latest phones and the previous generation's iPhone 15 Pro, potentially encouraging a new wave of demand. The last big upgrade cycle for the iPhone was in 2021, when many carriers were subsidizing new phone purchases to get users on 5G-enabled devices. Early demand signs for the iPhone 16 have been mixed. In the first 8 days of sales for the iPhone 16 in the September quarter, sales were better than the same period last year for the iPhone 15. Well, that's good. New iPhone 16 models accounted for 20% of total U.S. iPhone sales in September, down from a 29% share in September of 23 of the iPhone 15. That is technically a big drop. Yet at the same time, it's not completely affecting the company because, again, the EPS miss sounds like the one-time tax payout to Ireland, and also the revenue still seems to be steadily coming in above estimate. So, I don't know how much of a negative how much weight we can put on that negative. In China, the first 3 weeks of sales for the iPhone 16 did better than the prior year's iPhone 15 launch, according to Counterpoint Research. But stronger sales in China might not last because of recent smartphone launches from domestic Chinese vendors. Interesting. The new AI features aren't available in China. Okay, so the one additive that you're marketing to, the U.S. and all the other countries, oh, this is why you should buy our new model of phone. Apparently, they're not available in China. And we know China's a pretty big market. So that might be a little bit of an issue. None were available when the devices went up for sale in September. The first batch of features were released earlier this week. Okay, all right, so it's still kind of new. Rewriting text, cleaning up photos. People first had to get on a wait list to access them. Ooh. Apple said other features, including an integration with OpenAI's ChatGPT, will be coming later. Apple plans to be careful as it launches the new tools. Executives said the company's focusing on privacy and responsibility first. Quote, this is a big lift. You could put something out there and have it be sort of a mess. Apple's point of view is more like, let's try to get each piece right and release it when it's ready. Oh, yeah, okay. Users have upgraded to the new iPhone operating system faster than last year in order for them to access Apple Intelligence. Okay, that's technically a good sign for their new AI tool. If that's what they're focusing on now and rolling out, that's technically a good sign. Quote, there is a lot of interest from our customers to get onto the new software so they can experience the intelligent features. We believe it's a very compelling reason to upgrade. Of course, what are they going to say? Apple Services revenue came in nearly $25 billion, up almost 12% from a year earlier, but slightly missing analyst expectations of $25.3 billion. Of course. But technically, again, growth, double-digit growth there year over year, almost reminds us of FUBA, right? Oh, subscribers are up 20%. Oh, we were looking for 21.2% growth. It's like, yeah, go fly a kite. While iPhone sales picked up in the most recent period, Apple has struggled to kickstart a new product category. For Apple's biggest new product in nearly a decade, the Vision Pro headset sales have been slow with its high $3,499 price tag. Again, I'm not knocking anybody. We all make our own money. We're entitled to buy whatever we want. Something like that, I personally wouldn't buy. But, again, money, for the most part, has always been tight for most of my life. So, seeing a price tag like that may be a little expensive. But I will be honest as well, I haven't looked at, any videos of the performance and what you can do with this Vision Pro headset. So, for all we know, it might be worth it. So, I'm not bashing it. Third-party app develop. What bothers me is that, see, if it was $3,500 because it was made in America, I would support it. What bothers me is the fact that, and it's not just Apple, we know that, it's all of these companies. They ship this manufacturing overseas, and, for all we know, it costs like $15 to make a smartphone, and you bring it over here and you try to sell it to people for, $1,000, $1,200, $1,500. And, I understand it's business, but at the same time, just knowing that and knowing how these companies operate, something like this. I mean, if I found out it costs $100 to make, you're trying to sell it to me for $3,500, like, I'd be freaking livid. But that's just me. That's just me. I know people view Apple as like a status symbol, so people want an iPhone, not just any smartphone. People want a MacBook, not just a random laptop, right? So this is why, again, I can appreciate the fact that sales are probably going to be decent. However, I think because of the size and the history of successful products coming out of Apple, I have a feeling that even if they are kind of popular and a bunch of people go out and buy this headset, I do have a feeling that they're probably going to be below what analysts are anticipating, because they're kind of assuming that it's going to be, a grand slam home run, when it might just be a base hit. So we have to wait and see. But yeah, I wasn't aware of that headset. So maybe you guys, again, any of you who are on top of these products, if you're pumped about the headset, you just bought one, you want to buy one, let us know down in the comment section, how it works, how you feel about it and whatnot. Third-party app developers aren't gravitating towards the platform, and existing users aren't finding enough to do with the device. A cheaper version is expected as soon as next year. Kind of dropped off at the end there. All right. Well, yeah, that's pretty much it. Now, wait, who else reported, though? Oh, wait, actually, hold on. Let's look at Apple on stock charts. On the weekly, okay, 225, stock down 221, 60. Below mid-Bollinger Band on the weekly, which was a touch below 224. So now we may step down. We may see this bottom Bollinger Band of 210 and change, potentially even a retest of the low 200s. MACD has been pretty steadily dropping, tried to cross and retest, but rejected a couple of times here. Stock's been trying to stay above the mid-Bollinger Band. Almost looked like we were forming an ascending triangle here in the longer-term time frame. And now, again, as we approach this apex, we have the company missing on the EPS and the stock dropping a little bit after hours. And again, in the long-term scheme of things, probably not going to be an issue. But you can see when the company goes through these step-down consolidation kind of windows, you can see we pulled back here, stepping down throughout 22, bottomed out at the bottom Bollinger Band, had a nice climb there throughout 23. We step back down to the bottom Bollinger Band, have a bounce, come back down, have a big bounce, and now you can see how the Bollinger Bands were tightening as the stock flattened out. So now we can come back down and potentially bounce, right? You understand what I'm saying? So we'll keep an eye on it, because I don't think it's going to go that low, but 210 maybe, in my opinion, would be where the stock could go here on this EPS miss right now for the quarter. RSI was about 58 1/3, so over the long-term time frame, we could have potentially formed this ascending triangle and popped up and out, but again, the EPS missed, so we went down instead of up. RSI on the daily was 43.5. You can see where we're trending upward, tightening, and now we're probably going to break down. Stock right now 221.70. Bottom Bollinger Band on the daily 223 and a third. So around that 223 level, we do have a lot of action, but the stock right now around 221. So we broke those levels, and you can see here on the daily, stock's been above the 200-day moving average since May, right? So it's been on the up and up. It's even been holding the 50-day predominantly this whole time. So now that's why a pullback even to 201.71, this 200-day moving average, could potentially happen as well. We're talking about what? Roughly a 10% haircut on a $3.4 trillion company, which would bring us down to about 3.1 trillion, which again, percentage-wise, yeah, it's 10%, but realistically, it's not that big of a drop. PE for a tech company and a brand name like Apple could actually be viewed as undervalued at 35.5. But again, if we do a little, 8, 9, 10% pullback here, back to the low 200s, and we retest those moving averages, now you're looking at a PE maybe about 31, 32, right? Setting it up to bounce. Because then when it pulls back, if it pulls back, I should say, market cap 31, PE 31, now all of a sudden it's viewed as undervalued in the numbers. We're looking at future growth, what they expect the next quarter, the next year. So now people buy the dip and they pump it back up. You understand? But let's look at the numbers here. We can see 383.29 billion to close out 23, profits of roughly 97 billion, net margin percentage about 25.33%. Very healthy in my opinion. And if we add those numbers up again, you're looking at close to 500 billion in total for the year. And the market cap again 3.4. But even if we bring it down to like 3 trillion, we're trading at roughly, 6-7 times that annual revenue number. And that's really not too overextended. That's kind of around fair value. The company, paying a dividend, they could been consistently increasing that dividend. The debt was up to almost 124 billion, slowly been ticking down the last couple of quarters. 24.5 billion in cash, 100 billion in debt, so that would be like minus 75 billion. Equity has been bouncing around from the 60s up to the 70s, and now for last quarter, again, these numbers will update, but for last quarter, you can see 66.71 billion. So the debt would kind of cancel out that equity, right, if we were looking at the quote-unquote fair value. So in my opinion, the fair value of this current business right now is, probably about 500 billion in my opinion. So it looks like they're giving it like a 6-7x multiplier. But again, in order for a company to stay at that high of a multiple, they need to consistently beat earnings more times than not, and at the same time remain profitable and increase the profitability, which again is why that looks like that $14 million tax payout to Ireland that beat up the EPS numbers here this quarter. It looks like that, in my opinion, is the main predominant reason why Apple is pulling back. But I know they mentioned other companies. When was this? Was this the other day? I missed it. Looking at Meta. Yeah, Meta beats. Meta, amazing. I remember being there at the firm when the company went public and the first earnings report, everyone was curious to see what they were going to report. Are they going to beat? Are they able to do it? Is it worth buying? And I remember the very first quarter, I think they brought in about $1 billion. Now we're over $40 billion a quarter. Absolutely insane. Market cap 1.4 trillion. Technically they beat. Stock's been slowly pulling back. PE 30. EPS on the up and up, significantly coming in above estimates. Look at this, 10%, 9%, 9%, 15% above expectations. So it is working very well over at Meta right now. Last year, 135 billion, we'll call it, 39 billion in profit. That's what, 160, 170 billion in change. This company's trading 9, 10x that annual revenue number. Let's look at these other numbers real quick. Debt up to 38 billion, cash 32 billion. Free cash flow technically up a little bit, 1109 billion as of last quarter, 11.2 billion. Assets outweighing liabilities. But this would leave us with what, like 5-6 billion negative? If we come over here, we can see equity has been climbing very nicely. We have nothing but green and green here for Meta. Total equity up to 156. So if we take that away, we're at roughly 150 billion. plus business would be 170 billion, which would be roughly 320 billion, which would currently put, in my opinion, this company trading at like 4.7 right now, almost 5 times quote unquote fair value, which honestly isn't too out of hand. So something like Meta probably going to perform pretty well. Meta maintained buy at Citigroup. Yeah, I know all these companies reported earnings. I didn't want to look too much at the other companies. This was more I wanted to do Intel and Apple. But we can see Amazon spiking up as well. People always ask me, well, they used to ask me anyway, about all the big tech companies. Oh, Meta, Amazon, Google, which one would you buy? And I said, in my opinion, looking at the numbers at the time, I said that Amazon, I felt, was the most kind of fair valued, undervalued big tech company. And that would be one that I would probably consider buying if I was to buy a big tech name. And Amazon has really been on the up and up here. You can see another EPS beat, $1.43 a share, estimates 114, excuse me, beat by 29 cents, over 25%. Revenue comes in 158.877 billion. Estimates were 157.27 billion. So they beat that by 1.6 billion. Just phenomenal beats here. Robust demand surge in AI infrastructure spending. It's all about cloud computing and it's all about AI right now. That's what we're seeing. Advertising sales gain. Do we have any guidance? Net sales increased 11%. North America segment sales increased 9%. International segment sales increased 12%. Amazon Web Service segment sales increased 19%. I mean, just an absolute powerhouse, this company. Operating income increased to 17 compared with 11.2 billion. Wild. North American segment operating income 5.7 billion. It was 4.3 billion this time last year. All of these numbers on the up and up. Right here, the Amazon Web Service segment, look at that, operating income 7 billion up to 10.4 billion. It's about a 50% increase. Extreme. But operating cash flow increased, free cash flow increased. Free cash flow, less principal repayments of finance increased. Equipment leases increased as we get into the holiday season. We're excited what we have in store for customers. Again, you have to remember, yep, we have Black Friday. The company also has the Prime Video now. They're broadcasting football games. We have holiday season. We have Christmas, Hanukkah, Kwanzaa, everything else that people celebrate. So now is actually the best time of the year for Amazon. A lot of people know that. And also think about how many people are looking at the calendar, may have made a nice hit list and wish list on Amazon, and they're just waiting for Thanksgiving, for that Black Friday, Cyber Monday, and then they're going to put in, who knows, orders for several hundred, several thousands of dollars, right? So Amazon, we know, usually benefits well from this time of the year, and even the last 3 months, apparently business very good, beating on the top and bottom line there. But that was just a quick review again. Just looked at Meta and Amazon earnings updates. But there's only so much time in the day, and with all due respect, I don't want to make like 18 videos a day talking about all these different stocks. But we can update as we go. But Intel, nice little surprise, stock pops. Apple, EPS surprise miss and drops. So those are the two I mainly wanted to talk about, but that's pretty much it. I'll end it there. But also, if you have any input on these earnings for Amazon or Meta that we just looked at briefly, you guys know you can say whatever you want in the comments section. Let everyone know what you're watching, if you're pumped, if you're disappointed, what you're looking forward to. And yeah, so once again, stocks by the numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.